who better to talk about the implications of the GST reform than the individual who's joining us in studio right now, Navneet Munot, Managing Director and Chief Executive Officer of HDFC AMC. Navneet, thank you so much for coming by. Pleasure having you in the studio.
Entirely my pleasure to be with all of you.
So your initial thoughts, were you surprised, positively pleased by the pace at which this has taken place, that mammoth meeting that took place? I think all of us were caught by surprise. We were planning for a Friday.
So I think you have to give it to the government, not only for the policy prudence over the last several years, but also for the agile execution and effective communication. I think these two get added to the policy prudence, and we see in the context of rest of the world, we really feel proud to be an Indian today. I mean, look at the way the largest country in the world, the largest economy in the world has been communicating to the rest of the world versus what the steps that we have been taking. And on one side, you are seeing increasing tariffs and putting more burden on the consumers, while saying that our tariff revenues have gone up to the treasury. On other side, what India is doing is, I want to give more benefit to the larger section of the society. This is what the Bahujan Hitai, Bahujan Sukhai philosophy versus doing the tax cuts for maybe a few rich people in US while taking more tariffs in the form of tariffs from larger set of consumers. I think there is a contrast in terms of the way we are pursuing our policies. And you can see that on 7th of April, correct me if I'm wrong, Nifty touched a low of 22,000 or somewhere there. And despite 25% tariff, then another penal 25% tariff, and some of the other news flow, we have made a double-digit gain since then. That day, nobody would have predicted that in next couple of months, Indian markets would actually be higher than lower. So I think, yeah, I'm sure we are taking right steps.
I wonder, Navneet, if the person of the year this year would be GST or would it be tariff or somebody else?
No, I think all kinds of, the benefits, the way they have flown to each and every person in the society. So you have a rate cut by Reserve Bank of India, liquidity injection by Reserve Bank of India, creating a more conducive environment for higher credit growth. You had the personal income tax benefit, and now it has been followed by the GST rate cut. And it is not only about cutting rates and taking less taxes. It's also about, like Chanakya said, that the government should take taxes the way butterfly takes the nectar, something like that. Yeah. And I think this is what the simplification aspect should not be neglected. Taking advantage of digitalization, trusting your people, trusting your citizens, to have faith that over a period of time, we'll consume more and we'll pay more taxes, or we will earn more and we'll pay more taxes, and that will create a virtuous cycle for the economy.
Yeah. But guys, I was thinking about this, right? Since January, I mean, the RBI took the mantle and reform after reform or measure after measure, and now we've had the government come in full drive. It's been 9 months of some serious action on the India side.
No, then my question is, then why are the markets not responding in that fashion? Is there an underlying pain or concern that we're not seeing right now?
Last 5 years, I mean, look at the returns our funds have delivered.
No,
I think you cannot have that month after month, right? Yeah. I mean, then imagine, if every month market delivers those kind of returns, where the markets would be in few years' time.
I think it's also about because most of 2025 has been tough.
See, we had 3 years of 20% plus earnings growth. Yeah. I think this is a year of consolidation. We saw some moderation in economic growth as well as a corporate profit growth. Now, I think while working on capital expenditure, that we revived the investment cycle, government did the heavy lifting, hoping that private sector would take up. Also now creating a demand pull, which gives more confidence to the corporates if you see a higher consumption, higher investment, because you know that global environment is not conducive for exports. But even then, even there, I think all these measures can also lead to India taking share on the export side. I think semiconductors is a classic case, what Prime Minister talked about, that these are the digital diamonds, right? So you are thinking of like creating
when the price of real diamonds is dropping, it's time to go digital. Yeah. My question for you, sir, is that as people have more money in their pockets, what will they do with it? Now that money has come in from tax cuts, from GST savings as well, are you hoping that they make the decision to invest more to buy more insurance, to buy more mutual funds. Is that something you're actually pegging in?
Of course, I think the panacea for India is higher growth with macroeconomic stability. And this is what the government has done over the last decade or so, without compromising on macroeconomic stability, without compromising on political, social, and financial stability, give a push to the growth. And a highly balanced approach, that's why I use the word policy prudence, agile execution with effective communication, not only to domestic stakeholders, but to the global stakeholders. And this is the game we have been playing for the long haul. I think what we need to do is take the absorption capacity of the economy to a higher level, that once you have more savings flowing into the market, as of now we are seeing a bigger flow of domestic savings. At some stage we are going to see higher flows from the global investors also. How do we create a bigger absorption capacity where the potential growth rate of the economy itself can go up? And at $2,500 per capita, 1.4 billion people, this is where 18% of humanity is. This is where the youngest population in the world is. Will be the biggest supplier of new consumers to the world, will be the biggest supplier of labor force to the world for next several decades. So you have to ensure that you take full advantage of that demographic dividend. And what you talked about that last 9 months, the reforms that have been taken will keep us in good stead for next 9 years.
Wow. You know, on that note, and the flows that have been coming through to the domestic mutual fund industry have been absolutely fantastic, right? And if I look at the top schemes in terms of assets under management, I think at least 2 of yours in the top 5, top 7, right? I'm just wondering whether the way that companies are raising funds for capacity addition for plans in the future, it's shifted, right? They're not necessarily going towards debt. They're able to raise equity, and there is so much appetite that is being directed through you. Do you think that that will only gather pace with the kind of funds that are available? Because, for example, 1,000 crore IPO comes through, your scheme has 80,000 plus crore. It doesn't require a lot for you to deploy.
Navneet,
no, sure.
Day before yesterday, or yesterday, Ramdev Agarwal said that the monthly flows could hit 1,50,000 to 2 lakh crores. Are you of that camp too? So it's the 2 questions rolled into one.
So I think when the monthly flows were 4,000 crores, had I told you that there will be 7x in next 7 years, you wouldn't have believed it, So I think we have to look at in the context of the GDP that we have, the savings that we have. India has been a nation of savers for generations. What we are doing now is becoming a nation of investors. And I think this is very good for the economy. In a way, we can say that with pride that we have become Atmanirbhar when it comes to capital market. Now, I won't say that we don't need foreign savings. I think our investment needs are humongous. Humongous. We need more foreign flows for sure. And at some stage, it's likely to come both in the form of FDI as well as in the form of FPI. Now, I give you one data point. If I look at United States, there would be $50 trillion of institutional money which can potentially look at India as an asset class.
Okay.
Think about 1% switch. What amount that is? $500 billion. Now, to put that number in context, we have hardly got any money in last 5 years. But the potential for us to convert 1% of their investment assets today is $500 billion. That's $500 billion. That's why I've been harping on the point that what we need to do as an economy is to increase the absorption capacity of the capital. You meet the corporates. Just now I saw you were talking to someone. So 2 things are important for corporates and for us. Like one is the growth and second is the return on equity. Growth, of course, has slowed down a bit, but we are all hoping that it will pick up and government is doing whatever it can. On the return of equity, you have 3 sources. You have the sales margin into the asset turnover into financial leverage. Now, because of the bad experience of 2008 to 2014-15, everybody has been on a deleveraging history. It will take some time for them to leverage. They have been focused on margins. I think not so much on the asset turn. We need a little bit of more growth momentum. And then what it will create is maybe a risk appetite where they take more leverage. Equity is easily available today. They will take leverage and, of course, they will put up new capacity. We need to focus on everything rather than just on like macro stability, because growth is very, very critical in the long run.
So in a sense, just, I mean, I want to make sure that you've answered my question because you kind of did.
I'm sorry
I want to
for
be clear. I want to be
chipping
clear that is what you're saying. You're saying that right now they're not necessarily raising a lot of debt, but you're saying it's necessary.
At
It's
some
necessary.
stage, as of now, because the equity flows are good and companies are able to raise capital, and also you are seeing like new business models coming to the market. Some of these companies wouldn't have thought of hitting the public markets
Sure.
at that stage of growth, but markets have kind of like
Been conducive.
rewarded.
Enabled
Yeah,
them.
has been a conducive environment, which is very good, because this will kind of fuel more entrepreneurial energy in India.
This whole thought, Navneet, that 5 years ago, agar promoter bech raha hai, it was taboo. Now we see, for example, in HDFC mutual fund, subscribe to 80% of the total sale that the promoter is making, and the stocks don't flinch. What is this?
I think
method?
two
And
ways to look at
How
it,
do
yeah.
you also agree to do that?
No, also you have to look at it that in India, the promoter ownership is very high, right? You don't have many countries where you see like half the market owned by promoter. That promoter could be government of India, it could be a multinational company, it could be a family, it could be a private equity and VC guys. Particularly the private equity and VC over a period of time are going to reduce their holdings, and there could be few promoters who are looking at maybe a new lines of business, maybe there is a family succession, want to get a more professional CEO in place, many reasons for that. And market environment has been conducive. At the same time, I think market is discriminatory. I don't think that every IPO or every equity sale is meeting with the same reception. And I think it's better that we have more discrimination than chasing any kind of paper. But more interestingly, if you see the behavior of the foreign investors, you see a greater participation in primary market, whether it's the blocks or IPOs, than the secondary
We
market.
saw that yesterday as well.
Almost every IPO you look at the list, who are the investors, the same set of investors.
That's an important observation, because then it belies the claim that foreign investors are not hot on India because there is a basic problem. Clearly they are.
You
They're
look
just
at the primary
picking-
issuances.
Yeah, they're just picking their battles. As someone who is so bullish, like, you have been through this interview and since a
No,
very, very
bullish
long
doesn't
time.
mean, I mean, I've also been highlighting for over a year that valuations have been running a little ahead of fundamentals. One need to be cautious.
Even
there
now?
have been, now I would say relatively, because of the time correction we have seen, markets have been lower than where they were a year back. And of course, I think little bit of earnings growth, and now expectations that earnings growth is likely to catch up.
So let me come to my core question. Where does an astute investor who is betting on, not looking at daily trade, etc., look at if they are as are buying in to the India story, then what should they look at? Should they look at new economy? Should they look at the tried and tested large cap banks? Should they be a little more greedy, a little more risky? What would you advise?
So astute and daily trading is an oxymoron, right?
No, which
When
I
you said
said,
astute, not that, so
Yeah.
if you are an astute, then you won't do trading.
Exactly.
I think if you are an astute, you would take a long-term view on India. That I think with the demographics that we have got, I think the policy reforms that have been put in place, the infrastructure that we are building, whether it's physical, social, and digital infrastructure, and I think over a period of time, it's going to be a multi-pronged growth model than a very narrow set of growth models most of the other countries have seen. The only market that comes to your mind closer to India is like United States, where you have variety of businesses focused on growth and capital efficiency. I think India can do that. The only difference is the risk appetite there is much greater than what we are seeing in India, despite the fact that equity and market environment has been so conducive to raise risk capital.
So, because you spoke about other markets, I'm curious what you think. If you look at several large markets, including the United States and a few Asian markets as well, the reasons why the benchmarks are where they are because of a handful of stocks. And so therefore, one might argue that margin of safety is a little difficult to find. If some of these report a bad set of numbers, you could see a big crack, and one stock in the US accounts for over 4 trillion, right? So therefore, I'm just wondering what you think about India in that context, because where we stand right now, maybe not where some people would want to be, but at least we're not dependent on 3 or 5 or 7 stocks. Do you think that's a good thing?
That's the biggest positive about India. When I market India outside India, I say that you don't get this combination. A top-down macro story, a structural growth story with macroeconomic, political, social, financial stability, and a bottom-up story of stock picking. You get hundreds of businesses with decent size, capital efficiency, world-class management, high-quality disclosures, and a growth environment.
Navneet, will we see a Blackstone, Bridgewater, or similar size
HDFC
financial
AMC.
asset coming out of India? That's what I'm saying.
HDFC
You are
AMC.
amongst
And
the
I'm
largest,
saying
but
this on a serious note.
I'm asking on a serious
that why we should not aspire, Indian asset managers should not aspire for that kind of scale with quality and profitability. In 1980, Blackstone and BlackRock didn't exist. I think Blackstone came in 1982, BlackRock came in 1988. And several of those businesses are managing hundreds of billions in alternatives and trillions in public markets. Over a period of time, as this economy grows from 4 trillion to 40 trillion in our lifetime, you will see asset managers in India talking about that size. Today we manage, give like few billion here and there, $100 billion. Who would have thought 25 years back we were not even $1 billion?
It's been a great journey, and I'm sure you lead HDFC AMC into new highs. But it's so heartening to see that there is so much of optimism around things that Indian corporates
Markets
can
would
do.
have cycled. In our 25-year journey, I mean, the assets have multiplied, the returns have been phenomenal. But there have been many cycles. We saw like markets range bound from 2000 to 2003. We saw the 2008 crash. We saw 2013 bear market, taper tantrum and all of that. The COVID in 2020, volatility in 22. That will continue. That's the nature of the beast for next 25 years. It doesn't mean that every quarter market will deliver higher returns.
No, but what I really liked is how you started this conversation, pointing out the difference in policy and philosophy.
Yeah.
One is it attacks the rich less, but let's take tariffs from countries around the world, whether people
No, they are
in
not
those
taking tariffs from the
populations-
world. Ultimately,
From the
who's going to
people.
pay that
The
tariff?
consumer.
Tariff is going to pay consumer in United States.
Yeah.
They will
But
be
the-
paying
but the
higher
intent
prices
is
while
to-
visiting
but the
Walmart and
intent-
Costco.
The intent is to punish other countries. That's what will finally
I don't
happen.
know who are they punishing as of now. The world has benefited. A multilateral world, an open world,
Yeah.
where goods, labor, capital, and ideas moved
Yeah.
at the speed of thought in last 40 years
Yeah.
has created shared prosperity. It has been unprecedented in human history. So much of peace and prosperity in last 40 years for billions of people. So if you go back 300-400 years, when Europe did well, it was a few million people. When US did well, few million people. In last 40 years, we have seen 1+ billion Chinese, 1 billion+ Indians,
Yeah.
a billion+ people in Latin America or Eastern Europe and all of
Yeah, the BRICS,
this kind
you're
of prosperity
you're
has been
outlining the BRICS.
extraordinary.
No,
This
so-
kind of peace. And now we are trying to break that. I hope, but I take my word, in next 50 years, India will provide a leadership that humanity will remember for 500 years.
Wow, that's the 50-year outlook, and really I like the fact that you compared the way we are looking at a tax cut, which helps everyone. Excellent conversation with Navneet Munot,
Thank you so
as
much.
always.
Thank you for
you
being
so
here.
much for
Thank you.
joining us.